Welcome to Options Guide TV. My name is Brian Overby. I'm the author of the Options Playbook, and I'm going to be your host here for about the next 20 minutes on Options Guide TV. And the only reason why it's going to be kind of a short and sweet Options Guide TV is that everything's working right at this point in time. On Monday's show, we talked about getting bullish in the S&P 500 index, and I still think that the after-election euphoria is in the marketplace. Everybody's anticipating that every decision that is going to be made by the new government is going to be the right decision. So that has had a very euphoric response to the market, and we're still riding that euphoria. So nothing has happened yet, but the markets are perceiving that everything is that the sun will come out tomorrow and everything is going to be good. Now, tomorrow or on Friday, we have jobs data, and that's what everybody is focusing on to see if that jobs number kind of stay stable. And there's a little bit of concern about that, about inflationary pressures creeping in. Fed's still anticipated to cut. There's still a high probability of a rate cut coming up here at the next Fed meeting, but right now, everything just seems to be glorious, and I think we ride that wave all the way up until the inauguration. January 17th is an expiration that is right before the inauguration on the 20th, and from this point forward, going into the holiday season, which is usually good, we got Amazon to get a little bit of a pop. We talked about Amazon on Monday's show, actually, about just doing a short-term trade. Now, we didn't officially make it a paper trade, but we did see the fact that Amazon had kind of broken through a resistance level to the upside, and that if we could break through it, there's a chance that Amazon could get back to where it was after their earnings report. Okay, so far that has proven to be the case. Got a little bit of help by the conference that Amazon is supporting, where the CEO got out and talked about how AI is going to help their business, which is the exact same thing that they said at their earnings report. But for some reason, I guess it was heard a little bit more loudly this time around. And Amazon is up strong today. Not strong. It's up a bit with the rest of the market. We had Apple set an all-time high. Everybody's happy at this point in time. And the VIX is showing that. The VIX index is all the way down around the 13 level. As a matter of fact, we've done very well with our VIX trades throughout Options Guide TV. And I might be prepared to do another one going into the meeting. If the VIX stays so low down around the 13 level, or even gets down towards the 12 level, going into the inauguration, I wouldn't mind getting long some VIX some way, shape, or form, just anticipating that there'll be a little bit more volatility once the new administration takes over. So that's where I'm at. So let's go and start by looking at our S&P 500 index trade. So let's go to the Tradier Pro software, and our trade that we put on Monday was our traditional long call spread in the S&P 500 index. It's a long call spread where we sell more time premium than we buy. So another term for it would be a debit spread, also a bull call spread. You're bullish on the market, but you're positive theta decay. You like time decay because we sold an at-the-money option contract and bought a just-in-the-money option contract. We went 10 points wide. We used the December 20th expiration. So in our trade, I just want to make sure I use the 20th. Okay. 1220. Here's where we're at. And we paid $5.90 for it. Okay. The option contract that we bought was the 630. And the option contract that we sold was the 640. right, come on. Looks like I'm froze right at this point. There we go. Oh, now I put 5 of them in there. Let's start over. All right, 640. We put this trade on for $5.90. It is now trading for $7.25. The market is 30 points above where the short strike was when we initially established this trade, and we see that we see that if we're 30 points up, we're a good amount above, but we still need some theta decay. So here's the way that I'm going to approach this trade. The maximum that it can trade for is $10. We have $7 right now. We'll call it $7.25 is where we could sell it at. And there's nothing wrong with taking this position on right now and getting out. We put it on for $5.90, close to $6. We're up about $1.35 on the trade. But overnight tonight is going to be a fairly decent amount of time decay as we head into the weekend. So for this trade, we could, I think we wait maybe to the end of the week, keep a close eye. If we get back to the 640 level, we definitely are going to be cautious at that point in time. I don't see anything to stop the momentum. If you want to sell out before the jobs report, on Monday morning. Oh, where did that come from? On Monday or on Friday morning, that's a very plausible. I think that's the one thing that can really drive the markets and make it do a little bit of a flip. Obviously, you get news that can happen at any point in time. But if I'm thinking of closing this out, I'd maybe do this on Thursday on the close, see if we can get a few more days of time decay. I'm going to definitely put a limit order in. So what I would do is I would flip the script here. I'm buying to open. I'm going to be selling to close. Selling to open, I'm going to be buying to close. And I would put a limit order in around $8.50. Going out to the December 20th expiration, if we could get $8.50, leave that $1.50 on the table, I'd be very happy with that trade. So I would have that trade in good till canceled. Wait until Thursday and see where the market is at, and then decide, do I want to take the risk of the jobs report as far as the overall market is concerned? Right now, the VIX is showing a lot of complacency in the marketplace. If anything, that's a sign that the market's just too euphoric. Everything's setting new highs, including mega cap tech. NVIDIA still being strong, just all the way across the board. Everybody's happy. That's basically where the marketplace is at right now. So we came out, and on Friday, we also looked at, well, let's pull up Amazon, see where we're at on that one. Our upside target was, we're up another $5. I didn't look at that this morning, but the upside target was 215. We've blown through that. So now Amazon would be at a new high. I mean, it's not bad. It's established a new trading trend. And look at that jump. So we hit right up on this level, which was the recent high during the last earnings report. And now we even gapped up. And I think it more so from comments that are happening from that from the conference that they're hosting and that Amazon's hosting. But it's interesting because they're not saying anything different that they did on their earnings report. And yet we had that big sell-off. It really didn't go anywhere, but it was very volatile within that channel. Like, look at that, the volatility in Amazon. Here's a different earnings report, and then we came back. But this is just a big spike down for no really apparent reason. And then all of a sudden now we've established a new high. I wouldn't mind actually getting long Amazon into the close. The markets are looking good. The comments have been taken well at the conference. If you wanted to do once again, well, I think we do a rinse and repeat. We were looking from 210 up to 215. Now we've blown through that level, pretty strongly blowing through that level. We're up at the 220 level. Yeah. Let's do it. Let's pull the trigger. Let's have something to talk about on Friday in Amazon. So let's do an official paper trade in Amazon for Options Guide TV. The market is at 219.26. Let's hope we ride this. We got Wednesday, so we'll do a bull call spread. is what we're going to end up doing. Okay, and let's do 2 days to the December 6th. I don't want to be too excited about this. Is just something to watch, but I'll make it a official paper trade. I don't know what that actually necessarily means. But like I said, on Monday, I didn't get long Amazon in my own account. I have Amazon in general. I own the underlying stock, but I didn't just buy a call option. With 2 days remaining, I don't mind doing it. Okay, so here's my thought. Here's my thought. I'm being a little bit disjointed this morning. On Monday, if I was looking at that trade and I was thinking that we were going to get a breakout to the upside above the 210 level, I would have thought about buying a call option, either a just out of the money call option, but more likely probably a little bit in the money to get some delta, because I'm just looking for a short-term move based off of the chart. Means you can't buy as many of them if you go in the money, because you're looking to expend the same amount of capital on the trade. But that would be a trade that I would have done on Monday as a long call spread. Now that we're on Wednesday and we have 2 days remaining to the expiration date, still don't, I have an upside target in mind. Our upside target was 215 on Monday. Go back and watch the show that we were talking about on Monday's Options Guide TV. So here with the market at 218, I'm going to buy the 2-day option contract, and I'm going to sell some premium and get a decent amount of premium. We're going to go 5 points in the money. We're going to buy the 217.50, and we're going to sell the 222.50. And we're hoping that the market will continue and we can close above 222.50 by Friday. But the reason why I want to do this is, first of all, Amazon is going back to being an expensive stock. It's not $1,000 stock like before the split, but we're still looking at $2.18. We're trading at a decent implied volatility. 30% isn't bad. So we're getting a little bit of vol premium, considering that, we already had earnings, but it is the retail season. We're going to get numbers on Black Friday on all the retail sales. Stuff will just be trickling out. So with that mentioned, I don't mind this trade for 2 days. I don't mind it at all. You're paying $2 for this trade. You're getting 80 cents of premium. You're right at a 1 standard deviation move. The delta on this says there's a 25% chance of the underlying stock finishing at least 1 cent in the money on that trade. And you're risking 2 to make 3. That's simple. All right, that's my official paper trade. Let me set it to the what if calculator so that I can take a screen grab of that, and we'll talk about this on Friday. Very speculative and honestly 100% off the cuff trade. Now let's go in, and our view on the SPX is we're up on the trade. We're going to look at it on Thursday because we have jobs report on Friday, and we're going to decide, do we want to get out? We're going to put in a limit order to sell at $8.50. If we can get $8.50 for that trade, we're going to get out of that trade. And yeah, we don't need to adjust it. So the other trade that we looked at, what got very interesting, is BLK. And you just see the stock, it's at $1,000. Amazon split at $1,000. NVIDIA split at $1,000. It's time, BlackRock, it's time. It's time to split the stock. So I think the stock would do very well. And I would really like them to split the stock just because I don't like where the option contracts are at. Right now, you look at these bid-ask spreads, and they're kind of ridiculous, honestly. So the trade that we did, as a matter of fact, we did this adjustment on the fly because we're seeing these large bid-ask spreads on the stock. Let's go back to December 2nd. Okay. And so we decided that we were going to do a diagonal spread. Basically, executing a single option contract is just too rough. It's too hard to try to pull it off in here. We're seeing open interest, just the numbers just aren't there. But it's a very interesting, very popular stock in the financial space, which that whole sector has done very well. Solid price price to earnings ratio, solid growth in the company. Everything looks good, but if you look at the chart, it's a little bit ugly. So let me pull up BLK, and you look at the chart, and it's just got this downward trend going that started all the way back on November 5th, and we've just slowly drifted down with some volatility in the underlying. So we're sitting here trading at this level. So we sold a shorter term option contract and bought a longer term option contract, hoping that we could get somewhere close to a midpoint fill on that trade. Now, it was a paper trade, didn't send it in as a real trade, so I'm not 100% sure if we did. But bottom line is if I couldn't fill at a decent price on it, I just want to lay down until the urge goes away. Don't want to try to trade this thing too much because it's a beautiful underlying. It's very expensive, hard to buy 100 shares or a couple hundred shares in your account. Trading at $1,000. So this is an interesting alternative to that trade, except that there are such wide bid-ask spreads on the underlying stock. So here's the trade that we had on. And they basically came out and had some news saying that they anticipate more mergers and acquisitions, that the money's going to start flowing. Once again, it's the euphoria of the new administration coming in. And the market was up big yesterday, but now it looks like it's given some of that back. It's at 1,024. When we put the trade on, we were at 1,016. We still look fairly decent on our trade. We bought the 950 call going out to March. So let me grab that. Longer term bullish on this. This is basically an alternative to buying the stock outright. March 21st expiration. And we bought the 950, which is right here. And then we went and we sold the 1055 strike call with the December 20th expiration, which has 16 days remaining. And 1055. Sell that. All right. So we put this trade on for at the midpoint. Once again, you got to work these orders. So let's keep it right there. 91.50. That's going to be our price. We put it on for $87.65. It's now trading at the midpoint of 91.50 on this trade. Ideally, we'd like the marketplace to stay below 1,055 in the short term because we have this diagonal spread on. We do not want this option contract to get in the money on this trade. So 91.50 is where we're at. Let's hope that we get a whole bunch of time decay. Once again, we got a $2 bid-ask spread on this almost. And we get a whole bunch of time decay on this option contract, and it helps us pay for some of the time premium that we bought in the March contract. And if this expires worthless, we'll come back and we'll sell another option contract, avoiding this earnings on January 10th. And I remember on Monday, I actually mentioned a lot of companies like to announce stock splits around earnings. I'm 100% not in the know if they're going to split their stock, but I just feel like this is a decent opportunity on a stock that has solid fundamentals. Anyway, that's a player in this space. They manage a lot of money. So that's where we're at. Yeah, I would trade this underlying like every week if we had tighter markets, but the open interest is just not there. 80, this contract has two contracts, 83, 113. Markets are just too wide for a shorter term option contract like this. All right. All right. Do we have any questions? I think I covered everything that I wanted to cover today. If you have any questions, please do put them in the chat box on inside the, well, you can do, if you're in the YouTube platform, you can just put it in the chat box. You do have to be logged in if you're on the Tradier YouTube channel. You can also chat me up in x.com. If you open up and expand the window, there's actually a chat box that you can address me. We stream live via my handle, which is at Brian Overby, and also through the Tradier x.com profile. And then lastly, but more importantly, is if you go to hub.tradier.com, you actually can sign up and get access to all the great content that Tradier puts out, including notices of when they are when Tradier's doing the big summit events. Got another one coming up with the SIBO Global Markets, otherwise known as the Chicago Board Option Exchange, coming up here shortly. So please do make a profile, and you can chat us up and play in our reindeer games via that format, hub.tradier.com. It's worth doing. Thanks for stopping. We will see you Friday. Go Amazon, because that was kind of a last second addition to Options Guide TV today. And thanks for stopping in.
You know how the financial world goes. Here comes the buzzkill. Please make sure to take some time to read this boring disclaimer. We will owe you one.